Hi, this is Zach Mayer with a weekend edition of the Bulletin Board Heroes here at Zach's Traders Cafe for Sunday, the 19th of November. Starting off with a better look for the FTSE 100, RSI now in the 54 level, just near 55, which is nice, well above the neutral 50 level. We've actually had higher lows and highs there for the indicator, so maybe something decent is happening there. Closed just shy of the 50-day moving average, the blue line there around 75.08, and looking for an end-of-day close through the 50-day line to take us up to the top of that falling February trend channel at 76.60. Hopefully by the end of this month. That's quite a punchy call, but above 7,400 looks like we could actually do that. Moving on to the DAX, and here you can see that the market is going onwards and upwards, very near to the August resistance zone, 16,000. Above that, we're looking for the highs of the year, 16,500, hopefully by or well before the end of next month. We've got the 50 and 200-day moving averages both rising now, so that means a few weeks down the line we'll be going into a golden cross, and the run-up to a golden cross tends to be the strongest part of the cycle. We've already had a very strong part of this cycle in terms of the recovery from the October lows with the Bear Trap Island reversal and then gaps higher ever since, so pretty strong stuff. You could almost say that was good enough to end any bear market. Moving on to the Dow, which is also in decent mode at the moment. Just dragged its heels at the end of the week around the 35,000 level, but 35,000 was our target for the end of the month, so we're now actually upgrading that to 35,600 and year highs from August to be hit over the next couple of weeks if we're lucky. We're now looking forward to as high as 36,100 at the top of that rising trend channel from this time last year by the end of next month. Upside valid while we hold above the floor of the latest gap around 34,400. The 50 and 200-day lines also both rising together. It's effectively a golden cross, a sort of flat golden cross, and that is another positive signal there. Moving on to Bitcoin, and here we've got a situation where the market's still in consolidation mode, but at a nice level. The old initial October resistance on this rally was around 35,000. We've tested that as support as well in the last week or so, and above 35,000, looking for this market to break recent resistance of 38,000 and head as high as 43,000 by the end of this month. That is 43,000 derived from a 1-year resistance line projection. If we get that over the next 10 days or so, I think the bulls could feel quite happy with themselves. If there is a delay, then I think 43,000 would be even a decent target for the end of next month. On to the stocks, and looking at a couple of stocks from the Aquis market. I think I'm the only person who does that on a regular basis, and obviously not much recognition for that, but one has to try with the market, which will hopefully one day be the new Nasdaq, or the UK's version of that. On to All Things Considered, and here you can see we've got a wide rising trend channel. We've broken recent resistance towards the £1 level, 97 pence, the old resistance. Above that, looking for up to £1.40 as soon as the end of the year, the end of December. And just waiting for the 200-day line to start rising, and then we could actually have potential golden cross situation. That bear trap back in October below the old March support there at 66 pence was the giveaway for a potential turnaround here. So looking good basically while we're on the right side of the 100 pence level. Onto a stock which is doing rather well at the moment, Vinanz. Not much of a chart to go by, but you can see the candles looking very strong indeed. We were guessing that Vinanz should be able to get up to the 10 pence level near term, and hopefully we'll see that by the end of this month. But quite astounding to see an unfilled gap to the upside off the lows there, which is one of our favorite signals. We've had blue candles or clear candles all the way since then over the last week or so. Upside valid at least while we're above the 5.5 pence level on a mid-price basis. On to the stocks from the main market, or the London Stock Exchange. Let's say Amte is first, and here we're probably looking for an end-of-day close above the 50-day moving average at 1.34 pence to give us the first sign of a lasting recovery here. Here are obviously lots of funding issues and other issues there to clear the pitch, but that 50-day line well worth looking at over the next few days. If we can get on the right side of that, it may be the sign that fundamentally we're turning around there as well. Initial target would be up towards the 2.25 area, which was the September resistance zone. Less fraught is CapEx, which had a mysterious push higher on Friday. We broke a line of resistance there at 1.1 pence. Above that, we're looking for the 200-day moving average around 1.7 pence. Over the next week or two, big picture target maybe for the end of next month as high as 2.7 pence at the top of that broadening triangle from back in April. But the key here is holding above the 1.1 pence level. If you look closely, there is an unfilled gap to the upside off the low, which tends to be the start of the greatest rallies. Let's see if CapEx delivers. On to Celadon, which was a pleasing mover this week. Bear trap gap reversal, and above the old October support there at 87 pence. Looking for the top of that broadening triangle there as high as £1.21, and maybe up towards the 200-day line area in the upper 20s as well. Hopefully we can see that by the end of this month. Neckline resistance there at 105, so ideally we stay above that level as a best case for the bulls. Bear trap gap reversal is a formation which tends to work best here. Sort of historically, that seems to be most of the winners. The big winners have that set up, and you can see that set up precisely on the daily chart of Croma. Here we had a bear trap gap reversal on the 7th of November, and we pushed higher ever since. We had an initial target here at 58 pence. We had a second target here at 69 pence, which was hit on the nose on Friday, and also a golden cross. So I suppose the only thing left is to try and work out what the next level up will be, and that could be along the lines of the line I'm just drawing at the moment, heading up towards 82 pence, maybe by the end of next month, or perhaps the way things are going even sooner. So full marks there to the technicals on that. On to Canadian overseas, where we're sort of the 15th time or the 20th time we're looking for a lasting recovery here. There was a bear trap gap reversal back in July, which gave us the shares doubling up to the peaks in August. The current setup with bullish divergence and a resistance line to break there at 1.9 pence could give us up to 3.2 pence if we have a bear market rally in the shares. But the initial stumbling block here, that line of resistance from October. Let's see if we can break that. On to IX, which seems to be doing rather well, despite the fact that I don't think anybody in the market actually knows who they are. Starting off with the charting situation, where we've had an end-of-day close back above the old gap there from last month at 21 pence. Above that, then we're looking for 35 pence, hopefully by the end of this month. And the fundamental backing there was, I think, the decent news regarding an investee company. Moving along to a stock where I've been chastised. It's MyHealthChecked. Here is, I was informed by somebody who is a user of Zax Traders Cafe that twice I've called the shares higher and twice they've rallied and then fallen back. This may be the third time lucky with the shares, in the sense that there is an uptrend line there from back in August. That's around the 9.5 pence level. Above that, looking for 14 or 15 pence, hopefully by the end of next month. If you're cautious on this occasion, you wait for a break of the 50-day moving average at 11 pence before assuming that we'll have a lasting rebound. Let's see if we can hit that 200-day line near term on MyHealthChecked. On to Oncimmune, which looks like one of the best or better turnaround situations at the moment. Here we've got a rising 50-day line. We gapped off the low there, so that's one big tick, and we've had another gap higher for Friday, so looking for a pretty quick move towards 29 or 30 pence at the 200-day moving average and the top of that broadening triangle from June. The last time we were properly above the 200-day line was back in November 2021, so quite a momentous turnaround there on that situation. Parkmead doing well, as you would expect here, something which a company which is involved in the gas area to do. Unfilled gap to the upside is a bear trap gap reversal above neckline resistance at 15 pence. We're looking for up to 22 or 23 pence by the end of this month or even sooner. Revolution Beauty is next, and here you can see that the shares have gapped up earlier this month. We'd like to see them stay above the 50-day line there at 23 pence. If they can do that, then we're looking for the top of a broadening triangle from back in July, as high as 38 pence by the end of next month. Onto a stock which I gave quite a lot of coverage to earlier in the autumn, which is Silver Bullet, and here you can see that we've got a rising trend channel that's been in place since June, sharply rising 50-day moving average, and the view is above the 50-day line currently at 87 pence. We're looking for £1.40 by the end of this year. Last two coming up. First one is Starvest, which managed to escape my clutches, but you had a gap close buy signal back at the end of last month, and I suppose it gave you a notional 8 pence entry level. Current situation is at above neckline resistance at 8.5 pence, looking for 18 pence by the end of next month, or even sooner, at the top of a broadening triangle from the end of 2021. Another charting triumph, so to speak, is from Velocys, where we were looking for an initial target here. We went up to 0.95 and then came back. Support here at the top of that, rather bottom of that gap there from last week at 0.66. While there's no end of day close back below that, we're looking for a retest of the 0.9s sometime during the latter part of November. That's it from me today. More updates tomorrow.